Welcome to Chit Chat Stocks. Before we get to this episode, we want to talk about our friends at Public. If you're serious about investing, you need to know about public.com. That's where you can invest in everything: stocks, options, bonds, crypto. They even offer some of the highest yields in the industry, like the bond account's 6% or higher yield that remains locked in even if the Fed cuts rates. What sets Public apart is how they give you the tools you need to make informed investment decisions. Their built-in AI tool called Alpha doesn't just tell you if an asset is moving, it tells you why the asset is moving, so you can actually understand what's driving your portfolio's performance. Public is a FINRA-registered, SIPC-insured, US-based company with a customer support team that actually cares. Bottom line, your investments deserve a platform that takes them as seriously as you do. Fund your account in 5 minutes or less at public.com/chitchatstocks and get up to $10,000 when you transfer your old portfolio. That's public.com/chitchatstocks, paid for by Public Investing. Full disclosures in the podcast description.
Welcome to Chit Chat Stocks. On this show, hosts Ryan Henderson and Brett Schaefer analyze businesses and riff on the world of investing. As a quick reminder, Chit Chat Stocks is a CCM Media Group podcast. Anything discussed on Chit Chat Stocks by Ryan, Brett, or any other podcast guest is not formal advice or recommendation. Now please enjoy this episode.
Welcome to Chit Chat Stocks. Today we have the pleasure of being joined by Brian Stoffel. He has been a long-term writer for The Motley Fool, and he is a co-founder of Long-Term Mindset, where he currently runs the stock investing mentor program. Today we are talking about Mercadolibre, a fast-growing, exciting company based, I believe, in Argentina, if I'm getting that right. I guess before we get into everything, Brian, welcome to the show. I believe this is the first time having you on, so welcome to Chit Chat Stocks.
Well, Ryan and Brett, thank you guys so much for having me. Yeah, this is the first time. I know my partner, Brian Stoffel, he's been on a bunch, but I'm happy to be here and talk about a company. I believe out of all the stocks I own, this is the one I've owned for the second longest.
All right, that's got to be good for your portfolio because the returns have been fantastic. I think it's been a 100-bagger. It's one of those that, at least for the Motley Fool and other investors out there, has been one that has routine spiffy pops, for people that know that term, on its earning releases. But let's start at the beginning. How were you introduced to Mercadolibre, and what interested you about the company?
Sure. So how I was introduced, you'd have to go all the way back to, I don't know if you guys remember, there was a Global Gains newsletter at the Motley Fool. And it does not exist anymore. It was run by a gentleman named Tim Hansen. It just so happens that I was a middle school writing teacher in Washington, D.C. before I started writing for the Motley Fool. And our guidance counselor was Tim Hansen's wife. And so he was the guy that was just showing up at our school happy hours. And I was like, who is this guy? And then I saw that he had a newsletter, and I was just starting to get interested in stocks. This is back in, to put this in a time frame, this is back in about 2009, 2008. So a long time ago. And that was when I was introduced to Mercadolibre. I did not buy it, but it was one of their recommendations. In 2010, I moved to Costa Rica with my wife. We still live part of the year there. It's been 15 years. And just getting to know Central America, we had traveled in South America, just seeing how Amazon wasn't there. Walmart is kind of there, not really. Got me really interested. And then 2013 is when I first bought. And to be honest with you, what it really came down to at that point in time was I looked and it was like an $8 billion company. And to put that in perspective, I mean, I could be wrong. Someone might fact check me, but it was tiny. And I was like, my goodness, like this is really small for a company that's growing the way that they are and has an opportunity the way that they do. And so, yeah, I've owned shares for 12 years now. Unfortunately, I did almost all my buying back in 2013. And I only just say unfortunately because wouldn't have been a bad idea to continue adding as time went on, but it is my second largest holding. So I do know a lot about the company.
Yeah, and you mentioned that big opportunity that they had in 2013. And it seems like if we look back over the last decade, they've seized that opportunity for the most part. So why don't we go through a little bit of the history of Mercado Libre and maybe sort of the bones or the skeleton of its business model, and then we'll dig into the parts a little deeper.
Sure. So I like to think of it as a company that has evolved in ways that are similar to Amazon, which is, I think it's a fair analogy, where they started out with e-commerce. And so it was all about making a marketplace where people could buy and sell things. And when it started, I would argue that it was actually more eBay than it was Amazon, just kind of like a marketplace that listed things. They didn't necessarily focus a ton way back in the beginning on fulfillment and selling first-party goods, having warehouses set up all over, dealing with getting things from the merchant to the warehouse to the last mile so that it ends up on your door. That wasn't a huge focus at the very beginning, but I think being able to look up north and see how Amazon was developing, they saw, and their founder, Marco Scallarpin, had lived in the United States, and so he was familiar with what was going on, and they saw that that was what was needed. And that's really important because setting up those fulfillment centers, setting up the logistics chain, that is really hard. You're talking about building things that cost tens of billions of dollars spread out across a continent. You're talking about hiring thousands, tens of thousands of people. You're talking about managing that workforce. People don't want to do that unless they've got a really good incentive to do it. And once it's set up, there's even less incentive for someone to challenge. So they were starting to get into that when I first invested in them. And they have been, I would argue, quite successful with that. And what's important is that you have to realize that 10 years ago, huge percentages of Latin America were un or underbanked, which means that they didn't either use a bank or they certainly didn't have a way to pay for goods on the internet. And so they developed Mercado Pago, which is kind of like PayPal or Venmo might be an analogy if you're unfamiliar. They came up with a way to get on a digital bank or a digital payment system that was pretty simple. 2012 is kind of in the United States when we kind of hit a tipping point of over 50% of the population having a smartphone. It wasn't that different in Central America either, from my own experience. By 2012, I would say that a large percentage of people had a smartphone. And once you've got that, you've kind of got the thing that allows you to use a digital payment option really quickly. So Mercado Pago was paid just to grease the wheels of Mercado Libre's e-commerce site. It'd be like if there was an Amazon Pay way back when. The funny thing about Mercado Libre is this Mercado Pago was originally formed just to grease the wheels of this e-commerce engine, right? But it's been so successful that I would argue over the last 5, 6, 7 years, the e-commerce site is still incredibly important and incredibly valuable, and I would argue has the wider moat around it. But this payment option and the growth in the payment option, I mean, has really been the key to investor returns over the past 7 years. It's used more now for paying for things off of Mercado Libre's website, like gas or groceries or things like that, than it is for things on Mercado Libre's website. So it just goes to show how popular it is.
Yeah, and you can correct me if I'm wrong, but I think they have 100 million total users across. This is either e-commerce or Mercado Pago, and maybe 60 million on one of the other ones. But either way, there are, for a region that does have a lot of people, there are a ton of people in Mexico, Argentina, and Brazil using these products. And one question we asked people on Twitter if they wanted to have ask you any questions about this company. And a couple that kind of combined some together that said, essentially, look, Amazon has invested heavily, especially into Mexico, a place where Mercado Libre has had much more success. Why do you think Mercado Libre's moat has been so durable, even with this huge investment from Amazon in the region? And where do you see it vulnerable to Amazon or any other e-commerce competitors? Where, like, do you think it's the financial stuff that you just talked about and how it reinforces together, or is there something where they just knew this market better than their North American neighbor?
Well, I think knowing the market better than their North American neighbor is a huge part of it, and I think that does play a pretty big role. It is worth pointing out that I think if Mercado Libre were to be split up, and so their e-commerce was one thing, their Mercado Pago was another thing, their logistics was a separate one, I'd be much more worried about what Amazon might do, what Sea Limited, which is primarily in Southeast Asia, but is making inroads in Brazil. I'd be much more worried about it. It is absolutely something to keep an eye on, but it's also worth pointing out, look, Mexico has been in this, Walmart has been in Mexico and many other Latin American countries under different brand names. Where I live in Costa Rica, it's called Maxi Pali. They own that. They've been there for a long time, and Mercado Libre continues to take market share. I think it's how all the pieces fit together that's the most important. So if it was just Mercado Libre and it was just a website that you could list things on and they didn't have delivery, I would be very worried about Amazon. I'd be terrified of Amazon, but that's not what it is. And they do have that last mile delivery and the payment option. And so it's something where if I was living there, my behavior as a consumer, I have all these reasons to continue using it. It's the website I'm used to going to. It's got the payment option that I use for everything else. I know about its fulfillment capabilities because these days, I believe more than half of their packages are delivered in 1 or 2 days. And they've already made those investments. If Amazon is making those investments, to me, like if they're making those investments in Mexico, that speaks more to how big the opportunity is in Mexico than it does to them taking business away from Mercado Libre, because the numbers just don't bear that out. The growth in Mexico and e-commerce has been fantastic.
Yeah, and it seems like, at least in those countries, especially Mexico, Mercado Libre is farther ahead of Amazon. And as you mentioned, they have that FinTech advantage that Amazon does not have. We have another question here on the e-commerce side of the business. What I noticed when reading through some of their investor relations materials is they highlight constantly that Latin America e-commerce penetration is much lower than other parts of the world. I think they have it about half versus North America, and maybe even less than half compared to East Asia. Why is that? And what not fixes that, but what brings it to North America's level? Is it just riding like this general tailwind, or can Mercado Libre kind of proactively do that by building out the delivery and infrastructure where you don't have an existing UPS that a lot of companies in North America can ride on the back of?
Let me relate this to you with a story. Now, Mercado Libre's key markets are Brazil, Argentina, and Mexico. Those are the big three, but they're in Mercado Libre's e-commerce, I think 14 different countries. So a little story is this. My brother, he's not in it anymore, but my brother used to be in the Navy. He was a naval officer, and he was in the Navy when my wife and I moved to Costa Rica the first time. And as part of his background check for what he does, he had to send in all of his family's information to the Navy. And so he said, "What's your address?" I said, "Well, technically our address," and I'll translate this into English, our address was the Pink House, 150 meters from the beginning of the hill where this one church is. That was our address. It wasn't 42 such and such street. It wasn't, there are a number of Latin American countries where that's how it is. I actually like it. I know a lot of people hear that and they're like, oh, that's so backwards. That's so antiquated or outdated. I love it. We just got back from Costa Rica and my daughter's 11 and her friend sent her a card and they had to ask for the address for it. And again, we gave them it and they're like, you have to be kidding me. And they sent it the day that we left. We were there for 5 weeks. It arrived the day before we came back to the United States. It is just not how large portions of this area of the world, they don't operate the same way that we do in North America, and they don't necessarily have the infrastructure. Okay, so Brett and I were talking before we went on. There's really only, in Costa Rica, for instance, there's really only one quote unquote highway that has more than one lane. And the topography is a huge challenge. There's an Amazon rainforest. There are volcanoes. There are mountains. There are switchback roads between all these things. And this might sound so boring and so like, well, why does that matter? We live in 2025. Well, it matters because when people order things on an e-commerce website, they need to be delivered somewhere. And that means owning the last mile of delivery. And it's way harder than most people realize. But that's a great thing for Mercadolibre because they've already gotten started and are doing it, which means that if you want to challenge Mercadolibre, you're not only going to have to invest tens of billions of dollars in figuring this out, but you're going to have to do that and do it profitably while competing against the leader, which is kind of like, yeah, no, I'd rather not. Like, I'd rather just like poke my eyes out. That sounds more fun to me.
Do you think that's part of why Amazon has struggled in some of those markets?
It's hard to say. I mean, Amazon's had so many things to focus on that I can see why this just isn't the top priority. Like, let's expand into these other regions. Let's focus on AWS. Let's focus on our own original content. And then COVID comes along and they spend $4 billion just on COVID preparedness. I think Amazon's a lot more focused right now on making their existing network more efficient than they are on expanding their network, especially because they're spending so much on AWS, which I think is the right decision. By the way, Amazon is my number one holding, the one stock I've owned for longer than Mercadolibre. So I'm not hating on Amazon here.
Yeah, it does seem like there's plenty of opportunity left in North America, Canada, Western Europe, some of their existing markets for Amazon. And I want to come back to that market share number because to me it seems like, around the world, yeah, there might be some sort of differences, but what people want to do is probably spend a good chunk, maybe the 20, 30, 40%, maybe it'll be higher over the long term of their retail spending will be on in an e-commerce, method if they had that opportunity, if they could get same day or next day delivery. Do you see that as a very easy opportunity and tailwind for Mercadolibre where, okay, well, just even if they don't gain market share, if e-commerce penetration in these countries goes from 13% to 30% over the next 10 to 20 years, that's an easy tailwind to revenue growth. Is that how you see it, or do you see it more as a headwind that it's not there yet?
So I the way that I think about it is kind of funny. I think that it's both. And here's what I mean by that. I think that there is this enormous opportunity if they hit 30, 40, 50% of all things purchased retail in a country are e-commerce. But I think that it's going to take longer to get there than we're used to it taking in North America. And so I think a lot of investors have this expectation where they're like, well, why aren't we there yet? Well, why aren't we there yet? Well, why aren't we there yet? And I encourage you to buy a ticket and go visit these places and be like, oh, and again, this is not to say that they're, underdeveloped. They like different countries and different populations and different communities have different priorities. And, blasting out the landscape to put a really great freeway in would be awesome for e-commerce delivery. It might not be awesome, for a country that doesn't want to do that. So in a weird way, in a very weird way, I kind of view Mercadolibre almost like I do Altria. Now, that might sound like the weirdest analogy to make in the world. And for those that don't know, cigarettes. One of the things that made Altria such a great investment was this overhanging fear about lawsuits for a long time. Now, ironically, that actually made Altria the ultimate stock to own over decades because they offered a dividend, right? And if you set up your dividend on an automatic reinvestment program called a DRIP, a dividend reinvestment program, and you were getting a 6% dividend, and it was continually a depressed stock because people were worried about these lawsuits coming to fruition, then you were being able to buy more and more and more of this stock at pretty good prices when you were looking back on it 20 or 30 years later. And that's why Altria was such a great stock to own. You know, ironically, it was the fact that people were so bearish about this industry, it made it such a great stock to own, because once it became clear that, yes, these lawsuits are real, but no, they won't ruin the company, then the stock price normalized and it was like, wow, look at the returns here. Mercadolibre doesn't have a dividend anymore, and it's not involved in cigarettes in any way, shape, or form. But in much the same way, you know, we see the payment option taking off. Now, that's not surprising because, like I said, huge portions, I live in a rural area of people have smartphones, and that's all you need to make digital payments. And so you can use that to send money between people. You can use that. A lot of people use that to pay their bills, like their phone bill, their internet bill, their water bill, their electrical bill, whatever it is. And so you've got a lot of payments happening there. You don't need to worry about the topography of a population or how a package gets delivered for the last mile, which is why Mercado Pago has been growing so fast. But if you're a long-term investor, don't sleep on the e-commerce. But know that it's going to take time. And by time, I mean decades. I don't mean quarters or years. I mean decades.
Okay, let's talk a little bit more about that Mercado Pago and the FinTech business overall. You've mentioned it as sort of greasing the wheels of e-commerce. Maybe that was sort of the genesis, but it's evolved over time. How do the FinTech and the retail businesses work together? Maybe how do people use them aside from the retail business as well? Mm-hmm. And then do you think Mercado Pago gives Mercadolibre overall a competitive advantage against some of these other players?
Yeah, I think it does. So ways that it can be used. I mean, again, they have mobile point of sale devices or point of sale devices, which are kind of like if you go to a farmer's market, you pay for something with your credit card. You know, that vendor has something that they plug into their phone and then you tap your credit card. So Mercadolibre sells those to vendors throughout the countries where they're established. And that's a big deal. Again, while the physical infrastructure might not be there in a lot of Latin American countries, the internet absolutely is there in a lot of these countries. And so most people pay with credit cards in a lot of the places that I've been in Latin America. So you don't even have to be on Mercadolibre's website to be using this. I absolutely think that Mercado Pago reinforces that Mercadolibre e-commerce site because you're more likely to use Mercadolibre over, say, an Amazon or a Sea Limited, or if Walmart were to have like a jet.com moment, which was their e-commerce kind of catalyst in North America, I believe that you'd still be more likely to use Mercadolibre's marketplace because it's what you're familiar with and it's your payment option is integrated on there. But the other thing that I think is important is Mercadolibre, the marketplace, really reinforces the moat around Mercado Pago as well, because you're so used to getting, I don't know, an automatic delivery from Mercadolibre for something that it becomes habit forming to use Mercado Pago, because I don't know if we want to get into this yet, but I think the two biggest risks to Mercado Libre that I keep my eye on are, one, a payment option being commoditized, which I think we saw that happen over the last 10 years if you just follow PayPal stock or if you just follow Square. Like, it can become commoditized. And so there has to be a special sauce that keeps people in there, because if it doesn't, it becomes like airlines, where it's just you choose the cheapest possible one because they're all interchangeable. Well, if only one of them is directly connected to the biggest e-commerce company in this section of the world, well, that's a key differentiator. And then the second is the company's credit business, which is, again, kind of like a genesis that's come from Mercado Pago. It's called Mercado Credito, where they offer loans like small, short duration personal loans, loans to merchants. And then what's really been taking off is their credit card. That is both, it's a force multiplier is what it is. It is really juicing returns. And as long as they're making good loans, that's great. But it is by far the biggest risk too, because if they make mistakes in underwriting loans, or if they get caught and there is some calamity that happens in that region of the world that causes them to all of a sudden have a whole bunch of people defaulting on their loans, which that's one of the reasons it's great that these are mostly short duration loans. They're not, 30-year mortgages or anything. Then that risk is contained. But to me, that is always one of the first things I go and check. Is I check the loans that are beyond 90 days past due, and making sure that that's not ticking up. And then I also watch this metric called NIMAL, which is the net interest margin after losses. Usually it's been over 30%, even 35%. It's come down to about 28%. And you might think that that's alarming. And without any context, that is alarming. But the main reason for that is because their credit card business is growing so fast. I don't know about you guys. I hope, hosting a podcast about finance issues, you pay your credit card bill off at the end of every month. And what's the interest rate you pay on that? 0, right? As long as you pay it off in full, it's 0. Well, a lot of people using a Mercado Libre credit card or Mercado Pago credit card are paying them off right away, which means that they're going to get less interest, right? Because people are paying them off. That's great. But that will cause that NIMAL to fall in a way that is not alarming.
All right, listeners, we've got a new sponsor here at Chit Chat Stocks, and their name is Blue Chippers Club. Blue Chippers Club was recently started by two friends of ours with the goal of building a tight-knit community of stock-focused investors. Inside this community, everyone gets to share and break down their portfolios, pitch stocks, receive feedback, and participate in weekly calls. We truly love this idea, and it's why we're promoting it here on the show. In fact, we are in this community ourselves and enjoy just how much value we get by collaborating with other investors. If you're interested in joining, head on over to bluechippersclub.com and hit apply. Right now, it is completely free to join. The link is in the description. Yeah, let's dive more into this credit portfolio. We had a lot of questions on this on Twitter as well. It's something that I think analysts have been, I don't know if concerned is the right word, but they just want to know what's going on because it's growing so quickly. If I take a look, and I pulled up while you were talking at our friends at FinChat, I should mention, use our link, finchat.io/chitchat, get 15% off any paid plan. One of their KPIs they have that they update each quarter is credit revenue. And I'm seeing a growth from December 2020, about $246 million in revenue, and it's grown at a 96% annual rate to $3.6 billion in 2024. You talked a little bit about it, but what is the strategy here? And is this how they take, again, you mentioned the worries about commodification or commoditization. Is this how they become a full-fledged bank for their members? And yeah, just take it anywhere you want, because I'm seeing just rapid growth here and it's becoming a larger part of the business. And I think listeners would, it would be helpful to get a
Sure.
full understanding of it.
Well, let's just think about it from the perspective of a merchant, right? So in real life, when my family and I come back from Costa Rica, we've stopped doing this, but we used to bring a whole bunch of coffee from the coffee farm that we live on, and we would sell it at a local farmer's market. Now, we didn't do this to make money, and we did all right, but we didn't make a ton, and we thought it'd be really educational for our daughter. But let's just assume this was our full-time business, right? And we needed a mobile point of sale device in order for people to be able to pay. And so we got the Mercado Pago, the little insert like Square has had, or we just put our handle out there like Venmo has. So we're already in there, right? We're in the ecosystem because hypothetically here, we're using Mercado Pago so that people can buy their coffee and pay for it without having physical cash. Well, all right. So next, we want to expand. And so when we want to expand, my wife and I are thinking, well, we go to one farmer's market a week. If we go to 3, that'd be great. But if we go to 3, well, then we've got to buy, two more tents. We've got to pay for people to be there. We've got to buy more coffee roasters. We've got to bring back more coffee. And look, we'll be able to pay all this off after a year, but let's just say we don't have the money to buy all those things right now. So we could seek out another bank and get a loan from that bank in order to expand our coffee business. Or Mercado Pago already has all of our information. We've filled out most of the paperwork. They know how our sales are doing. We could just go to Mercado Pago and say, hey, can we get a loan to buy all this stuff? And we're going to pay it back within 3 months because, 3 months of sales of our coffee, we'll be able to pay it off. It makes more sense for me to use them than to go to someone else because I want to spend as little time as possible worrying about financing and most of my time on making sure I do a good job in rolling out these new locations. So the way they're in with their credit portfolio was start with the merchants, and that's what they've done. And now they're moving on to the consumers. So before they were talking to me and my wife, the people that were selling the coffee. Now they're really focusing on their credit card business. So now they're focusing on our customers. So they're just saying, well, people go to Brian and Allie's coffee stand and they use a Mercado Pago mobile point of sale system to pay for their coffee. Why not have them pay for it with a Mercadolibre credit card? I mean, tap that credit card on a Mercado Pago point of sale system, and now everybody's in the ecosystem. So that's how you roll it out. And that is another advantage because nobody else in Latin America has that relationship that's that wide over that long of a time frame with both sides, with the merchants and with the consumers.
Yeah, I can see. You called it out as one of your biggest risks, also sort of opportunity and a risk. I could see how you characterize it as that just because it can look good until it doesn't, right?
Exactly.
You don't know what those loans are. You're not the one originating these loans, except for maybe you might have a good sense of how the one with your coffee stand would be doing. But yeah, for the most part, the loans can look really good and growth can be exciting, but obviously growth at a lender could be risky as well. I want to kind of double down on the Pago side of things. So there's been a lot of conversation made about competition with Nubank. New Holdings is the overall parent company, but Nubank, I believe, is the brand in South America. What do you think of this competition? And then I have a follow-up, which is, would you be more concerned about an eroding moat in the e-commerce side of things or an eroding moat on the FinTech side of things?
So first, Nubank. To put all my cards on the table, I have not spent as much time as I probably should have on Nubank. It actually is on my list of stocks to really dive into. And in my own community, I'm actually doing that starting next week. But I can say this. If Nubank is a serious threat, that has not shown up in the numbers yet at all in terms of Mercado Pago's growth, which doesn't mean that Nubank is uninvestable. I don't mean that at all. What it means is there's probably going to be more than one winner in this region, which isn't surprising, right? Like we've got MasterCard, we've got Visa, we've got Discover, we've got American Express, different levels of success across those four, but there's certainly room for all four of those. So I am more worried about the moat degrading on the Pago side because I think it's more likely. I'm less worried about the moat degrading on the Mercado Libre marketplace side because I think it's less likely, because I think it's harder to build that moat, because it's not about getting a phone in everyone's hand. It's about buying 1,000 delivery vans and hiring thousands of people and building fulfillment centers and maritime shipping and weather and mudslides. Mudslides are a huge deal in a lot of these countries. Like a FinTech doesn't have to worry about that, but that's what makes the moat so wide. That why would anyone want to deal with that? If the e-commerce moat started to degrade, that would be hugely alarming to me. But if you look at the take rates that the e-commerce side has had, I mean, this is another one I think that is up on FinChat. I'll try and pull it up right now. What they do is they measure the take rate, which is basically just like out of all the goods that are bought and sold on Mercado Libre's marketplace, what percentage of that just becomes revenue for Mercado Libre? Because obviously, it's not going to be huge. And if I'm looking right here and I look at their take rate in commerce, here we go. We've got it pulled up. It was 10% right before the pandemic. And it's almost 25% now. I mean,
pretty good.
Merchants aren't going to do that unless you're the only one who can do the thing that you're offering to do.
Who would you say the biggest competitor is in e-commerce or just to the e-commerce business? Is it C Limited, Amazon? Because the way I'm not an expert on this market, this e-commerce market, I'm not an expert on Mercado Libre, but it seems to me like there is there's not really much of a competition to their direct business. Like people can have an e-commerce website, but no one is close to replicating their full offering.
Yeah, I could be wrong. We could check in 2 years, and this might be the dumbest response ever, but I actually think that the sleeping giant is Walmart, because Walmart does have brands that is acquired there, and should they get the itch to expand, it's an option. We've seen how Walmart, all of their locations were an asset in the 70s, 80s, and 90s, early 2000s. And then they immediately became liabilities once Amazon came on, because it was just like, oh, you have to pay like for all those retail locations. They're not just delivery. And then when they got Jet.com, all those physical locations went back to being an asset because they became, and now we see Target does it, Walmart does it, all these different places do it. They're pickup locations, right? So it's not exactly the same as what Mercado Libre and Amazon do, but it's convenient. It's nice. Like I can just drop by, pick up my stuff. They'll come out, they'll deliver it. I think that's the sleeping giant, actually.
Yeah, interesting point. And especially in Mexico, Walmart is quite popular. And as you mentioned, some of these other countries, they have different brands under the same umbrella. One of the frameworks you use while investing is the concept of anti-fragility, or being an anti-fragile business. Feel free to talk about just this concept in general, but Mercado Libre, it's been a holding for years of a long time. Taking away from this conversation, you continue to think, or you plan on holding it for a long time after this as well. What makes them anti-fragile, and why is this business so durable?
FinChat.io is the complete stock research terminal for fundamental investors. They have robust financial data on more than 100,000 stocks globally. That includes more than 10 years of income statements, balance sheet, cash flow, and even company-specific segment and KPI data. Want to see Amazon's advertising revenue? FinChat tracks it. Like to track NVIDIA's data center business? They've got that too. The breadth of FinChat's segment and KPI data is truly one of a kind. You can go to finchat.io/chitchat to get 15% off any paid plans. If you sign up today, you'll automatically get 2 weeks of FinChat Pro for free, no card required. Again, that's finchat.io/chitchat. The link will be in the show notes.
All right, if you're serious about investing, you need to know about public.com. That's where you can invest in everything: stocks, options, bonds, crypto. You can even earn some of the highest yields in the industry, like the 6% or higher yield you can lock in with a bond account. Public is a FINRA registered, SIPC insured platform that takes your investments as seriously as you do. Fund your account in 5 minutes or less at public.com/chitchatstocks and get up to $10,000 when you transfer your old portfolio. That's public.com/chitchatstocks, paid for by Public Investing. Full disclosures in the podcast description.
So I guess maybe just to define it in case people don't know, it was a term that was coined by Nassim Taleb, who is a trader, a former trader. He's an academic. He's a professor of risk. He also has quite the Twitter following. I think he's got over 1 million followers. And he's written The Black Swan, Skin in the Game, and a book called Anti-Fragile, in which he says that most people divide the world into 2 categories: things that are fragile and that they break easily when exposed to chaos, and things that are robust, which don't break when they're exposed to chaos. And he said, we're missing a really important third category, which is the anti-fragile. Things that, when they're exposed to the right kind of chaos, the right kind of stressor, they actually don't break, but they also don't stay the same. They actually get stronger. The easiest kind of proxy for this is our immune system or our muscles, right? When you go and lift weights, you are introducing chaos. And as long as you don't overdo it, if you go and try and bench 1,000 pounds tomorrow, you guys look fit, but I don't think any of the 3 of us could pull that off. And I think we'd get in trouble if we tried to. As long as you introduce the right kind of chaos, you'll actually get stronger. And the beauty of looking for companies that are anti-fragile is I can stop trying to predict what's going to happen. What do I mean by that? I mean, I don't care. I just know that if there's some type of chaos that comes in and wipes out an anti-fragile company, that probably means it's wiping out everything. In which case, well, screw it. Investing isn't just going to work for me, right? Like aliens land and destroy everything. I'm not going to care about how anti-fragile my company is if that happens. But if a company has shown the characteristics of anti-fragility, then I think that it's like having your thumb on the scale. Like it tilts things ever so slightly in your advantage. And I've held Mercadolibre for 12 years now. Over 12 years, that can be a big deal. So what that means is you have to have your defense, and your defense is a wide moat. And I think with Mercadolibre writ large, you've got network effects for the e-commerce side, right? So there's a moat there. You've got switching costs with Mercado Pago. It's not like you can't switch. It's just that people don't switch. You've got low cost production. And what I mean by that is nobody else in Latin America can deliver a package, can go from click on a computer screen, package arrives 2 days later. Nobody can do that for a lower internal cost than Mercadolibre right now. They've got brand value. And so they've got all these moats, but then they also have the offense, which is optionality. Look, they started out and it wasn't even Amazon. When they started out, it was eBay. And then it became eBay/Amazon. And then it became eBay/Amazon/PayPal. And believe it or not, even today, it's eBay/Amazon/PayPal/Shopify, because you can set up digital e-commerce storefronts with this as well. And so that combination, plus financially speaking, they've got more cash than debt. They're free cash flow positive. And they have a management team that's bought in. They're founder-led. They own, Marco Scalperin owns about 8% of the company, which is not a small thing when you're a $100 billion company. that is what makes it. And then, I used to only focus on anti-fragile companies, which worked incredibly well for me from I started doing this in about 2015. So from 2015 to 2022, it was great. But then I don't know about you guys, how 2022 treated you, but my portfolio fell over 50%. And that's because I forgot or needed to learn to focus on the anti-fragility of a stock. And a stock and a company are not the same thing. If it's a Venn diagram, there's a lot of overlap, but they don't overlap perfectly. And so that's where valuation came in. And even with Mercado Libre, their free cash flow is somewhat artificially high. And I only say that because they set aside a ton of money for credit losses for the same reason that we were just talking about, because if their credit portfolio goes south, they've got to have a lot set aside for that. But if you guys had to guess without looking, company growing their top line by over 20%, I think it grew by over 30%. Earnings are growing even faster. What do you think their price to free cash flow is today?
I'm trying to think of the context from all the stuff we talked about. What I would say is something of a fair price, maybe 30 to 40, the 30 to 50 times range would be something that I would guess where it would trade at.
Because you're asking the question, I'm going to assume it's a little lower. Also, like you said, the free cash flow, including the coverage or the credit coverage, I would assume it comes down a little bit. I'll go maybe 25.
14. Trades for 14 times free cash flow. Now, again, all that being said, the coverage for those credit losses is not insignificant, but at the same time, it's about 20% of the company's, 25% of the company's free cash flow comes from that. But still, I mean, even so, it's probably if they didn't have to do that, it's probably still trading for, I don't know, around 20 times free cash flow then. That, to me, that's an anti-fragile stock too, where they just have to not screw everything up.
Well, it sounds like we're wrapping things up here, and it sounds like there are lots of levers for Mercado Libre to pull for things to go right. It also feels like they have a lot of wind at their back, so to speak, and momentum within both Pago, e-commerce, and even Credito as well. But we do like to ask the pre-mortem. Mercado Libre has grown its earnings per share from $2.40 in 2015 to $37.70 in 2024, which is a phenomenal growth rate. Why would earnings per share be lower 5 years from today?
I think that earnings per share could be lower 5 years from today for a couple of reasons. Some of them good, some of them not so good. I'll give you the good reason first. The good reason is that they've hit on another Mercado Pago-like revenue stream, and they're reinvesting in it like crazy. That'd be great, right? Like, that's the story of Amazon over the last 30 years. Their PE ratio is usually through the roof. And a lot of people are like, oh, that's too expensive. They don't realize, well, that's just because they're reinvesting everything in something else like AWS. So that would be a good reason. If we were looking at a bad reason, it would be that the credit losses were significantly more than people were expecting. Another reason could be that, I'm assuming that the combination of e-commerce, delivery, payment makes it so that Mercado Pago is sticky. Let's just say that it's not, for whatever reason. Well, then that could be a problem. And then I'll also say the dark horse is, it's funny because in Argentina right now, we're actually seeing the opposite of kind of a president who is taking a very libertarian approach. But if certain governments decided that they were going to start taxing companies at an exorbitant rate, I mean, once you set up a delivery network in a country, it's not easy to pivot to a different country. You can't pick up a fulfillment center and drop it somewhere else. You can do that with your credit business, right? You can unwind it and then just focus on Mexico if that's the place, or focus here or focus there. You can't do that with e-commerce. So that would be the other thing. But I will say that geopolitical threats have existed for the entire time Mercadolibre has been in business. In fact, when I first invested, Mexico was not, they've always had a big three, right? Now it's Brazil, Argentina, Mexico. Do you guys know what the third one was when I first invested in it?
Gonna guess Colombia.
Venezuela.
Which now is just like
economic collapse.
Yeah. And Mercadolibre is still here and it's still doing well. But I mean, that's not something you can ignore either. Like, there's always a possibility that a government could do something, and because you can't pivot out of a country where you have fulfillment, that's something you got to be aware of. But I also think that's why the stock trades for such a reasonable valuation.
Yeah, versus its growth perspective. And compared to probably any other e-commerce player out there, any other retail player, they have that muscle memory or just the skills built up to weather any of these economic headwinds. Because what I find fascinating with the business is that despite Argentina going through hyperinflation, they've been profitable. It seems like they haven't really missed a beat in that country. And if that country starts taking on, recovers economically, I feel like they'll actually have some tailwinds in that country, and could be quite promising.
Absolutely.
All right. Well, Ryan, I think that's it. Do you have any more questions for Brian before we sign off?
No, I think that was pretty comprehensive. That is going to do it. So thank you, everyone, for tuning in. Thank you, Brian, for your inaugural episode on the show, or your first appearance. I do want to remind listeners that Brett and I are not financial advisors. Anything we say or discuss on this podcast is not formal advice or recommendation. Ourselves or guests may buy, sell, or hold any of the stocks mentioned on these episodes. Thank you again for tuning in, and we'll see you all next time.